Hey everybody, I'm starting a little early. We've got a lot of people registered, so I'm going to let them pop in. And I was playing with these Zoom filters that I know that they were there, but I didn't realize what all was in there. So I just thought this classic TV look was really funny, but I'm going to take it off. I was just playing around. So let me do that. But it takes everybody a minute to hop in. So I thought, let me just get it started early while I'm playing around with my filters, and I'm going to turn them off. Let's go back to none. All right. How do I save that? There we go. So if you're looking for your Zoom filters, it's down there where it says stop video, where it's got the little camera. There's a little bitty arrow on it, and there's some virtual backgrounds and virtual video filters and the video setting. In there, it's got a thing that says touch up my appearance. So check that out too. This is why I love Zoom. I look way better on Zoom than YouTube or any of those. All right, everybody's jumping in. So welcome from Austin, Texas. It's rainy and dreary and gross outside. I opened the windows. Oh, let me give myself some light. Oh, that's too much light. I opened the windows and it is not pretty, so I just went ahead and left them off. There, shut them. I'll probably do this some more. All right, that's my little alarm. It's time to go. It's really my alarm that I'm supposed to take my medicine for my sinus surgery, but I think yesterday was the first day. I didn't have to take anything, so that's good. Hi, Dr. C. All right, we've got, like I said, we had a lot of people register. It's kind of funny, and I appreciate everybody that registers because even if you can't attend, registering then gets you an automatic email with the recording and the slides. So everybody's going to ask that question that will follow tomorrow. But also, like, I can go in and see what our registration number is at. And I was thinking, do I really want to do another one of these PPP, HHS webinars? You know, these people are probably tired of hearing about it. And then I had huge turnout. So it keeps me going. So I appreciate all of you guys. A couple of housekeeping notes. First of all, I'm Amy Knight with Knight CPA Group. Old name, Amy Taylor, which I almost said. It's been a few years now, so I've gotten better about not saying that. But we are a CPA firm. We're here in Austin, Texas, but all we do is home care and hospice, nursing home and assisted living. Just that short, concise, post-acute, long-term care is what we do. We do full services. With that, so we do everything from bill pay to bookkeeping, accounting, cost reporting, tax returns. We do all of that. We don't do payroll, but I have a few really good payroll partners that I work with that we're really close with. And then we don't do billing either. So that's, everybody knows that's its own little animal, big animal, honestly. So anyways, that's a little bit about us. And I just appreciate everybody being here to, see my smiling face. You're the reason I wear makeup on the days that I have to wear makeup. And anyways, okay. So let's get going. More housekeeping. Q&A. If you've got questions, it is very important that you put them in the Q&A panel. So down at the bottom, you have a toolbar on your Zoom picture. There's a Q&A panel that lets me answer them and mark them answered so I can get through everything. I am happy to answer questions. The way the presentation, I've got it's kind of a bit of a repeat of what I did right before Christmas. We didn't have a huge turnout then because it was like the 22nd. So I'm going to repeat that and then try to spend more time in the important parts. So I've got 3 parts. First part is going to be just kind of a not general overview, but all the miscellaneous, not all of it, but several of the miscellaneous things that might impact you that were in this new COVID Act. Let's just call it that, December COVID Act. It's called the Consolidated Appropriations Act 2021 or something that doesn't really have any relative term in it that we can all relate to. So I'm going to go over the miscellaneous items. There's some new tax deductions and some things that got extended and stuff. So I'm going to try to hit all of those. Not all of them, but I'll hit the important ones. Then we'll do PPP, which will include current PPP, PPP forgiveness, and PPP round 2. That's where I want to spend some time. And then we'll finish with HHS Provider Relief Fund, because there was some change there, mostly to the definition of lost revenue. And so that's what we'll cover today. So probably I'll take a break after PPP and answer any questions on that before we go into the HHS Provider Relief Fund. So if anybody's here just to hear PPP, feel free once we're done with that to drop off. It doesn't hurt my feelings at all. Excuse me. All right, so let's get to it. I'll need a couple of seconds to share my screen. And then go into presentation. And then let me swap settings. And the good thing is when I'm in this presentation mode, I don't hear all the dings and knocks from my Slack account, which is what we use internally for communication, which has been dinging and donging and going off. So anyways, welcome to our Wednesday webcast. We are trying to get very consistent with all of our webinars being on Wednesday, if at all possible. And then in addition to that, we're going to do just kind of, we're doing a series of just whatever is hot right now or whatever is relevant, or even if it's not relevant, I think you should know it. So that's kind of how we're rolling with this. The first Wednesday of every month, we've got an events page on our website. We try to keep it updated. Some of these come off very quickly and they're last minute, and I apologize. I try to push them out via email. I will say this as kind of a side note, if you don't know this, because I didn't know it. I use HubSpot. It's a mass email generator, but there are very strict, I'm sorry, it's all this allergy stuff. There are very strict spamming rules, and we have to comply with that. If you don't see my email and at least just click on it or click through, you can click through, but if you don't even just look at it and review it where the system acknowledges that you reviewed it, just click on it, you will eventually drop off of our email list. Because I've had some people say, hey, I didn't get your email. When I go back and look, that's why. They haven't been engaged. So, and that goes for any vendor or anybody you work with. If it's something that you like to see what they have coming on, even if you don't attend all the time, give them a once in a while glance, just to stay on their radar. Otherwise, it just starts dropping off and you don't get an email at all. So that's kind of a little side note for you. Anyways, I'm just not on purpose stalling. Let's get going. All right, now these are updates. I'm going to point out of course, I'll fix this typo before I send out slides, which does answer question number 1. Handouts will go out. It's just going to be this PowerPoint. And I'll update this date here because these are going to be updates as of today. This is the latest we've got. This was signed into law. If you recall, actually my webinar last time was before it was actually signed. So it was signed on the 26th or 27th of December. If you remember, Trump was stalling and playing hardball, mostly over this $600 first bullet right here, and finally signed off on it. So now this is in law, but in looking for any updates, which don't mean updates to the law, but updates to how everybody's interpreting it, like the professionals, all the CPAs out there that really, there are people that their job is to read the latest regulations and laws and then interpret them and tell it to the rest of us, kind of like I'm doing for you. I couldn't imagine that job. So there's not anything out since since I presented on the 22nd. So I just gone through and kind of refined it because I felt like I was kind of all over the place. And I feel like I understand it better than I did then, but there haven't been many changes. So going through these miscellaneous items, stimulus payments was one of the big topics that affects individuals. So those checks went out this week. For instance, I know my mother got hers on Monday, direct deposit. It's going to be based on your 2019 tax information. Phase out, which means if you're single with income of 75,000 or more, married 150,000 or more, it starts phasing out. So it phases out $5 for every $1,000 over that limit you are, or some strange computation, but it starts phasing out at 75,000. It's fully phased out, which means if you made more than 87,000 single or 174,000 married, if you had more than that on your tax return, you don't get any payment. So, you know, a lot of my owners probably didn't get any payments. So they're going out now, again, it's based on your 2019 tax information. If you did not get a direct deposit Monday, don't fret. I don't think that means you're not getting one. I give it time. I think they do them in what they call tranches. Like they got the first tranche, second tranche, might be by alphabetical. My mom's last name starts with an H. So I'm not sure if that has anything to do with it. It is a credit on next year's tax return, but it's there's no repayment necessary if what you took receipt of is less than what you qualify on your 2020 tax return. So they're basing it on what you filed in 19, but it's a credit on 20. And so like if on 20, you made more than 75,000 or even more than 87,000 and shouldn't get anything, they're not going to take it back. That's my interpretation. So that's good. I will say this. All of the changes that I see are positive. They're wins across the board. And so that's good for everybody. So other provisions, if you recall, there was this employee tax, payroll tax deferral, where the employee could say, I don't want my FICA withheld. And I came out very strongly against offering that to your employees. If you listen to that, that did get extended from 12/31 to 4/30. Again, I still highly advise against it. Highly advise against it. I think it's a can of worms you don't want to get involved with. The FFCRA credits are extended through 3/31. So that's going to be, I do have a little more information on this. It's been asked a couple times. That's going to be your emergency paid sick leave and extended family medical leave act. And so the paid sick leave is when your employee is out for quarantine, either because they were exposed, tested positive, or have symptoms. There's like several reasons, but it's because it affected the employee directly and they cannot work remotely. You are allowed to pay them wages and then have a credit, take a credit on your tax return for those wages paid, which I highly recommend. Why not pay your employee and then the government's going to pay you back? Is basically how that works. Now, there are lots of rules with that, and each employee only gets 10 days total pay under that regulation. Now, the Extended Family Medical Leave Act is the one where if the employee had to stay home because there was no child care for their child, they were paid 2/3 of their wages. You could pay them 2/3 and then get a credit for that on their tax return, on your tax return, payroll tax return. Also extended through 3/31. So those have been extended. Now the difference is previously in 2020, I don't have the exact number, but I think if you were over 50 employees, you were required to pay that. Now, even if you're over 50 employees, you're allowed to, but you are not legally required to. I don't know why you wouldn't. That's just my opinion on that. So that's an update there. This is really cool, and it's really to drive more business back to restaurants, but you get 100% deduction for meals for 2021 and 2022. So that's going to affect next year's tax filing. It's not for 20, and I don't know why. Those that don't really know tax, the big thing here is usually you're limited to 50% on meals. So it does have to be purchased from a restaurant, but still, where else do you purchase meals from? I would guess a grocery store. And then that unemployment, the additional unemployment that has been extended. This is a very brief blurb. There's more to it. It's extended through mid-March at an additional $300 per week. Remember last year was $600 per week back in the summer, and I don't recall how long that went. Do you offer, I've got a quick question. Do you offer CPE for your webinars? I do not. I apologize. That's a lot of work and compliance to be able to be certified to offer CPE. I hear from a CPA standpoint. I definitely don't can't do nursing credits because I'm not teaching any kind of clinical for any of you nurses. But that is something I will look into in the future. But I don't right now. There's a lot of compliance to get registered with them and accepted and all that. Although it would be a really good idea because then I could get a lot of credit for all of these webinars that I put on for you. So I need to think about that pretty hard. So I'll look into that, but that answers that question for now. Somebody also asked, relevant to this topic, are healthcare employees still excluded from the CARES Act FMLA? Yes, but they did come out and kind of clarify that. That's going to be your direct field staff, healthcare employees. So at first we were like, oh, we're all healthcare employees. But they said, no, it's going to be direct care. So only your field staff does that. Are they exempt from it? But again, in 2021, you don't have to do it. Now, just because an employee is exempt, like a healthcare provider, doesn't mean you cannot. So again, you can if you wish, even if they're exempt. That just means you don't have to offer it to them. And the point is, and the reason that they said 50 or less, is those of you that are larger employers, you got to kind of picture how hard it is for a small employer. So like for me, for instance, if somebody here, granted, we can work remotely and it works just fine, but let's say we can't. We're small. If somebody needs to take an extended leave, like a pregnancy leave, maternal leave, I mean, that's hard on us. Like I don't have enough staff to then cover their workload. So then we have to bring in a temp. So the reason why it was kind of 50 and less, you don't have to, is because if all the employees had that option to stay home and be paid when they could be at work, working, well, we saw that happen. They didn't come in. And so that's kind of there. And then same thing with the healthcare providers. You as a provider, as an employer could say, look, I'm exempt. I don't have to pay you nurses to stay home. And so I really need you at work if you're capable of being at work. And so they knew we needed the field staff in the field, right? So that's kind of why it went that way. I think I've got, is the 100% deduction for meals in restaurants for businesses only or for personal as well? That is for business only. That is not for personal. So that is a good question. That is just going to be for businesses. The meals deduction, it's 100%. You've always been able to deduct meals. It's just usually limited to 50%. So to try to drive more business, they're upping it to 100%, which like is great for me. For instance, I buy lunch for the office every day. I need to stop doing that. But it's a great way for us to come together, and we order DoorDash, and it also kind of keeps everybody in the office and keeps them working when we're not eating. But so that's going to be 100% write-off instead of 50%. And then to get the credit for the COVID pay, do you have to also take the credit on the Social Security on the 941? Yes. So the way that works, and again, I know payroll, I no longer do payroll. When you pay somebody, it depends on what payroll service. If you're using a payroll service provider, they'll have it all set up for you. You need to know what the pay item is for that tax credit. So what that means is a lot of them might call it EPSLA, Emergency Paid Sick Leave Act, or maybe they drop the A, or maybe it says COVID. Whatever it says, you want to use that pay item for those wages. The payroll system knows it's going to credit you those wages, and it only credits the Social Security portion of the employer tax, not the Medicare portion, which is good if it's going to pick one. Social Security is the higher one of the two, but the system will do that all for you. If you're in QuickBooks payroll, again, it should be set up in your payroll. If not, you need to contact support or whoever helps you with that. Don't contact me, please, because I don't know. I don't do QuickBooks payroll at all. So I'm not exactly sure. But then actually, you don't even have to wait for your 941 to be filed to get the credit. So let's say you're on a schedule where you pay payroll this week and your taxes are next week, or you're on a schedule where you're with a payroll processor and they take the whole amount, payroll and taxes all at once, you're going to feel it right then because the wages get paid, you get the credit, that credit is applied to your next tax deposit. So you don't even have to wait for the 941. So it gets credited right there. So you don't even feel the cash outlay. Now, if something were to happen, especially if you're smaller and you had a lot of COVID wages and it was more than what your tax deposit was going to be, A, it'll roll to the next tax deposit. And then B, there is a place on the 941 to also claim the credit. So if it didn't get claimed when you were doing the payroll and you kind of went back and redid it, there's still a place. Or if you manually do payroll, God forbid, manual payroll, there is a place on the 941 to claim that deduction. So if you noticed it, this second quarter 2020 941 changed to accommodate that. So that answers that. Carlos, I'm going to answer your question about the 300 employee limit because that deals with the PPP. So I'll answer that when I get to that part of the presentation. So other provisions which are individual specific. Now you can, this is different. If you're a non-itemizer, so you just take the standard deduction, you don't itemize your tax return, you can deduct up to 300 in charitable contributions and 600 for married. And we call that a quote above the line deduction, which is a good deduction. And so because normally you don't get charitable contributions if you don't itemize. So that's a big win. So, and that could be Goodwill, clean out your closet, take stuff to Goodwill, basically whatever tax bracket you're in. If you're in easy math, if you're in a 10% tax bracket, then for $300, it's a $30 tax reduction in tax. It's not a credit, but it will reduce your taxable income by 300, which reduces your tax liability by 30 if you're in 10% tax bracket. And this is probably not going to be relevant to anybody, but if it is, normally you're only allowed to contribute up to 50% of your AGI as a charitable contribution. This year you can give away your entire AGI. AGI is adjusted gross income. And so that's a tax number, okay? Unreimbursed medical expenses, there's a floor. So that means that you had to, it was 7.5% for a long time, then it went up to 10%. So what that means is it was where 10%, you had to have medical expenses in excess of 10% of your AGI. So easy math again, if you made $100,000, that was your AGI, you had to have $10,000 of medical expenses to be able to deduct any. And it also means, I don't know, first of all, I'm not the tax person here at the office. I'm not even sure if you get to deduct the first 10,000. You only got to deduct what's over that. They dropped it back down to 7.5%. So now it's like $7,500 if you make 100,000, and then over that you get to start deducting. Energy efficient improvements to non-residential rental is now permanent. A lot of times they put out these they're almost like tax incentives, but they put out these tax regulations, but they're only good for like 3 years or 5 years and then they expire. So they made that permanent now. And that's a non-residential rental property. So again, if you got some rental commercial rental real estate, that's what that would apply to. Like if you put solar panels on them. Qualified tuition deduction replaced with increased lifetime. I'm not even sure exactly what all that means. With increased lifetime learning credit and income phase out thresholds in 2021. So if you use that, there have been some changes there. Changes to depreciation on certain residential real property, which would be that would be relevant if you have rental houses, like residential rental property, and real property would be like air conditioner units, probably roofing. Roofing's tangible, things like that, right? So, and then the eviction moratorium was extended through the end of this month, so nobody could be evicted. I probably shouldn't tell that funny. I had a funny that my nephew said, it kind of cracked me up, but I don't want to show those colors of my family. Another little SBA program, there is an additional 3 months of payments to your traditional SBA loans, like in the original CARES Act. Again, none of this is going to be taxable. This is if you had a regular SBA loan to maybe help on the purchase of your agency or what for whatever reason, and back in the summer they just started making your payment for you. They're doing that for 3 more months. That's what that is. And I've got a bunch of white blank space here because there are some other adjustments, but they were related to live venues, live entertainment venues, like live music. And it's just irrelevant here, so I took it out. I'm sorry, I drink a lot of water. PPP, let's jump into the PPP forgiveness update, the whole update with Paycheck Protection Program. Nobody even calls it that anymore. It is all PPP. And I asked some of my colleagues, I said, what are we calling this newest legislation? They said PPP 2. I said, okay, and I've actually seen that in several places now. A very important feature to come out of this that I think will impact all of us is the fact that the payroll loan, the PPP loan, is no longer a tax concern. The original act was written by the Congress to be not taxable. And IRS, I won't go into the long of it. The IRS basically came down and said, oh no, that's cool. We won't tax the income, but we won't let you deduct the expenses, and we have precedents for it. And here's how the regulation flows. And so here's what we're doing. And so basically the IRS kind of overruled what Congress's intent was. In interpreting a lot of law, you have to understand the original intent goes a long way. Luckily, Congress stepped back in, and that's really a lot of where that's one big reason we had a whole second piece of legislation passed. They came in, and I like how they did it. They wrote it now, and it's straight up tells the IRS, I don't care what you say, it is not taxable, and yes, they can deduct their expenses, and it will not be limited in any way, shape, or form, and it will not, affect their basis, and yada, yada, yada. This is free money in every aspect of the term. So they really covered it really well there. So long story short is that is now fully tax-free. You can deduct the expenses. That's a huge win, at least for all of my audience that I've been working with. A couple of good questions here. I will email out I'll email out the part of the slides, but just verifying the 2020 SBA loan payments do not have to be brought in as taxable income. Correct. 2020 the loan payment that was I stutter. Of your loan payment, part was interest and part was debt reduction. And they're saying none of that is taxable. That's our interpretation until they say otherwise. Now, I don't have nearly the guidance like what you're seeing on the screen here about that, but we are told it's not taxable, and that is what it says. And then somebody asked, does it matter if the expenses for PPP were in 2020? Great question. And then the loan doesn't get forgiven until 2021. Does not matter at all. And then what's on my next slide? Let me talk about that for a second. Part of what we were doing were we were strategizing, okay, well, we spent the money in 2020. We don't yet have forgiveness, so we're going to deduct it in 2020. Then if 2021 we get forgiveness, we will then include those expenses in the 2020 tax return as income and pay the tax on it, then thereby extending the tax liability due date another year, right? And even the IRS, again, this is before this new act, the IRS then came out and said, yeah, real clever, but no, you won't. If you even think you're going to get forgiveness, whether you get it, whether you've even applied for it or not. If you are following the program and you're planning on getting forgiveness, then you cannot deduct those expenses. So the IRS has been very, very strong on this topic. That's why I feel like when Congress came out with this new act, they said, no, 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 no. And they shut it down. So now it doesn't matter. You want to deduct them in 2020, and even if you don't get forgiveness until 21. And then, not to jump ahead of myself, but if you get a 2021, a round 2 PPP loan, then even, you know, those expenses belong in 2021, you deduct them in 2021. So let's see, another question about forgiveness. You know, this is so interesting. They said, do you know if we have to have something from the bank that says the loan was forgiven, because their banker called and said it was forgiven, but they didn't get a letter. I say this is funny because I fully expected that we would get some sort of notification other than the bank just saying, all right, your loan's been forgiven, which is exactly what we've seen. That's all we've seen. And so we have been told by the banks, and everybody is like, no, that's it. There is no formality. There's nothing. I mean, you could probably ask your bank, hey, could you print me a statement showing a zero balance? And so that, you know, and then somebody else popped in and said it was forgiven, and the SBA did send a letter. So it sounds like some people are getting them and some aren't. I will say, I don't think, we've got about 70 loans that we're working with. I don't think we've seen a letter. Somebody says the bank sent a letter. We've seen a lot of bank letters, but not, because there's kind of two phases. There's phase one where the bank says, hey, we got your application. We're recommending forgiveness, 100% forgiveness to the SBA. We've sent it to the SBA. We'll keep you posted. Then they come back and say, okay, SBA forgave your loan. You're good to go. I've seen a lot of very casualness on that. So I'm very, honestly, I'm really kind of surprised with that. But that's fine. As long as it's forgiven, right? I don't, the CPA in me does come out occasionally, and it says, like, for me, I want to see at least a loan statement from the banks showing a zero balance. It's just kind of me. All right, moving ahead. Let's see. Other news. There is what is going to be called like round 2 or second round of PPP loans. It's a little bit confusing, so I hope I did a better job this go around than last at breaking this down for you. It's on the next slide, but before we get there, they did do a streamlined forgiveness application for anything under 150,000. I'll be honest, this is the only thing that I've seen in this, because, you know, we all had these big hopes that they would come in and do blanket forgiveness for anything under 150,000. Because they did a whole new form, makes me think they're not going to do blanket forgiveness. And this is their version of blanket forgiveness. And basically, the streamlined application, you give them your number, it's kind of like, here was my loan, here's how much I spent, I got 100% forgiveness, thank you, see you later. Oh yeah, by the way, I testified to these 3 things or 4 things or whatever it is. It's very, very simplistic. However, you are required by law to have done all the computations and be able to support them should you get questioned. So what we're doing, and what our recommendation is to everybody, go ahead and do the calculations like on the easy form, and just save that, save your work paper, save that, and then just file this short 1-pager. That's kind of that's the approach we're doing. It did also clarify, because there was question, although we had all kind of settled into our understanding, but it was not formalized anywhere, and now it's been formalized. You know, originally it was 8-week period, and then they extended it to a 24-week period. And so, you know, the very, very rigid CPAs were saying, okay, it says 8 weeks or 24, but it doesn't say anything about any amount in between. They've come out and they said any length in between. So any period of time between 8 weeks, no longer than 24 weeks. So if it took you 10 weeks to spend it, if it took you 14 weeks to spend it, whatever, you're all good there. So they did give us that, kind of solidified that understanding. So Returning borrowers. So this would mean that you're going in for a round 2 of PPP loan. You've already had a loan and you've spent it, like this bullet point down here says, you have used or will use the full amount of your first loan. So you would be a returning borrower. You must have 300 or fewer employees. So they're really kind of shrinking the field of who's eligible. Again, you will have, already had a first loan. And here's the kicker. And I really think this is kind of a double-edged sword. I don't know if that's the right term. You have to be able to show a 25% reduction in gross revenue. So revenue in one quarter 19 versus the same quarter 20. So you're going to review quarter by quarter your change. Did you go down from 19 to 20? And if so, did you go down by more than 25% or more in any one quarter? Now you can't match first quarter 19 to third quarter 20. It's got to be 1 to 1, 2 to 2, 3 to 3. We are going to, just for any of our monthly clients that might be listening, we're going to go through and do a quick, I've got admin working on it, look at that. Because in my mind, I think most of our clients don't qualify, but there may be some that do, right? So I want to, if you qualify, I think you need to take advantage of it. So we're going to do it just quick, look at QuickBooks and see what it looks like. Now, it also opens up for first-time borrowers to come back into the game. I shouldn't even say back into the game, but get into the game. Businesses, the way I read it, because I think this is one of the questions that Carlos asked, and this came from the AICPA and the Journal of Accountancy, and there might be a little tiny bit of plagiarism, I'm sorry. Businesses with fewer than 500 employees are eligible, or that are eligible for other SBA loans. So SBA is for small businesses, right? Which generally means 500 or less employees, but there are some exceptions. And so if under SBA you can qualify as a small business, then you can qualify for this. That's what this means with 500 or fewer employees that are eligible for SBA. So wait, I'm reading that too much. The original round back in April, May, if you qualify for SBA at all, then you could qualify for PPP. This is restricting it a little bit further, the way I read it, down to, okay, maybe you're SBA qualified based on gross revenue, but it's still saying 500 or more or fewer employees. So it's taken those that had a lot of employees, but less than, I think it was like 15 million in total revenue, but you had a lot of employees. They still called you a small business. I think this is going to strip it down. You really still now have to have fewer than 500 employees. Now, the question here, and I would need to research, is do those employees, are those FTEs or actual employees? And I think they are actual employees, part-time, full-time, it all counts. I would need to verify that, so don't set that in stone. And then sole proprietors, independent contractors, eligible self-employed individuals. It also brings in nonprofits and including churches. And for our very beloved TAC, our Texas Home Care Association, they were excluded originally because they're a 501c6 instead of 501c3. So original round allowed 501c3s, but not all the others. And so this did open that up to those some of those other nonprofits. Specifically, a 501c6 was listed. It also food and accommodation service operations with fewer than 300 employees per location. So think about Chili's. They're owned by Brinker, which is huge, but if they got 300 or less employees per location, and that may not be a good example, but again, it's going to break it down per location, but that is only for food and basically hotel and food service industry. I want to make sure we're real clear on that. It allows borrowers So it also includes, there were borrowers in the very beginning that got the money, and then there was a lot of scrutiny about, did you really need the money? So then people returned the money, or they spent part of it and didn't spend the other part. I have somebody specific that I worked with in mind, and that was way up in the Northeast, but they were very large, and they couldn't spend it all in 8 weeks. And maybe she hung on to it for the 24 weeks. But again, the plan was to return part of it. This would allow you, so even if you kept part of it and then you said, look, I don't want to keep anything I can't spend and a lot of time and get forgiveness on, it's open back up to you. You can get back in and get the remainder of what you can get the maximum that would have been available then, right? So if you gave it all back or part back, if you gave part back, you can get part back, get it in a loan. Now the loan size has been cut. It was at 10 million, it's cut down to 2 million. Again, really trying to make this for small businesses. Loan size is still 2.5 times your average monthly payroll cost in the prior year. Now, I took that again, maybe a little plagiarism. It said in the prior year or calendar year. Now, so does that mean 2020 payroll or 2019? Probably I need to dig into those details. The form for round 2 is not out yet, and the further guidance isn't out yet. One of my colleagues did mention yesterday that we are expecting it today, but I don't know. And even if it comes out today, I still won't know yet what all it says. But we'll see. So I don't know what year or if you get a choice of which year to calculate that on. Now, hotels and restaurants, again, get a little preferential treatment. They can get up to 3.5 times their average monthly payroll in their loan. Another big change was that they've added additional expenses that can now be allowed, and that's going to be operations expenses. So they're going to let you deduct software, cloud computing facilities, if you've got anything hosted in the cloud, payroll processing. So payroll processing, all your payroll fees, sales and billing functions, and accounting. Now, does that mean the entire accounting fee? That's the way I read it. That's verbatim. So the catch is you are still required to spend 60% of what you claim for forgiveness has to have been spent on payroll. But if you need, if you're not a labor intensive, if I've got other viewers that are not labor intensive, like my home care, hospice, nursing homes, then there are these other costs that can also be included for forgiveness now. This one I find very interesting, property damage, but it's only property damage due to public disturbances in 2020 that were not covered by insurance. So basically, if you're in an area that was rioted and insurance didn't cover it, you can deduct those costs. And then supplier costs that are of goods that are essential to the operation of the entity. And I would say, all of your medical supplies for sure. I think there's also another more. Also all of your PPE, right? So your covered worker protection. So anything you've got to do to protect your workers, which also include any renovations that you did to the office, plexiglass that you put in, those kind of things. And maybe even I saw there was a restaurant and they had this device up on their wall in the kitchen, almost like those Mitsubishi's mini split AC units that you can put on. Anyways, but coming out the top of it was like this blue UV light. I don't know, but I was like, I wonder if that's a sanitation thing to clean the air for the virus. So things like that you can kind of probably include as well. I don't think most of my viewing audience, that's very pertinent to, because everybody's mostly been spending these loans on payroll 100%, and that's just fine to do. Lastly, another piece of the original program was that if you received an EIDL grant, and I know a lot of people did not, the EIDL grant was this thing, and of course, when the rush was on, it was all online directly with the SBA directly. And all you had to do was go and you were saying, I'm interested in an EIDL loan, which is an economic injury disaster loan. And that EIDL loan is not anything new. It's what happens when there's a hurricane. It's handled, and it's there for economic injury due to a national, to a disaster. Anyways, you said, hey, I'm interested. And they said, okay, cool, fill out this info. Oh, by the way, do you want a $10,000 advance? And you said, well, by God, I do. And you said, you gave them your bank info. And then next thing, it was weeks later, you got a $10,000 deposit. If you got in real early, it was $10,000. A couple weeks later, it adjusted to $1,000 per employee. It wasn't even a couple weeks later. It might have been a couple days later. It adjusted from $10,000 to $100,000 per employee up to $10,000. And again, so like if you were small like me, $7,000, 7 employees, you got $7,000. But the kicker was if you got a PPP loan, this EIDL grant, whatever you received in this EIDL grant would reduce your forgiveness. So let's say you had a $300,000 PPP loan, spend it all appropriately. You apply for forgiveness for $300,000, but you had a $10,000 EIDL grant. You have to reduce it by $10,000. So you really are only going to get $290,000 forgiven, and you have to pay the other $10,000 back to the bank. That's gone. They did away with it. So no longer have to reduce your PPP loan. It has no impact. It's now truly a grant that doesn't have to be paid back and also is not taxable. If you already filed for forgiveness, and because we have a lot of those clients, you need to go back to the bank and they need to forgive that last amount and refund any payments that you may have made towards it if that happened. Okay, so make sure you follow up on that money. You don't want to just leave that set on the table. Okay, I've got some questions. Let's go through them before we jump into the Provider Relief Fund. Again, Carlos asked, is the 300 employee limit supposed to be equivalent full-time or 300 overall, including part-time? I am 99% sure it is actual employees, because when we did the original applications, it asked how many employees do you have? And that was an actual employee count. Like how many, the best way to get it is go to your payroll register for the last payroll, how many checks were issued, right? It usually gives you a check count or an employee count. So that would include part-time. But then, and it was very confusing because then to meet forgiveness regulations, there are requirements. There was an FTE component, and that's the FTE count is relevant to that, to make sure you didn't reduce your FTE count. But I think that the overall, company size being small or large is just a straight head count. So I'm going to answer it that way. If somebody knows different, please share. I do not mind being corrected. Well, I kind of mind a little bit, but I don't take offense to it. I don't like being wrong in the first place if I don't have to be. Let's see, not to jump ahead too far, but is there anything in this new package about forgiving SBA loans at all? A straight up SBA loan given in 2020. Francis, not that I have read. Now, bear in mind, the president was not wrong when he said this bill was 5,600 pages long. It is technically 5,593 pages long. It's absurd. So I have not made it all the way through, but I have not, and I sit in on as many webinars as I can with my peers. There's one called Gassman, CPA firm, Gassman somebody. He does a lot. And then Ed Zollers is kind of our tax guy that we follow. I haven't heard anybody talking about this yet. I will definitely keep my ears open for that though. Not that I'm aware of. I do remember there being talk about it, but I don't know that that made it in. What is the outcome for PPP2 if somebody purchased their agency in Q4 19, were down 25%, but not under the same LLC? Jay, good question. And I actually have done a little research on this. it does state, it's in the FAQs of the PPP program. They did come out and say, if you acquired the assets, so basically the business, or all or substantially all of the operations of the business, but it's a new EIN number and a new owner, then you can still act as if it didn't change ownership. I had it come up, one of my nursing homes, when they buy a new facility, they really just assume operations, but it's under a new EIN. The operating company is a new EIN, but the nursing home operations never ceased. And that's what they're really after. So you as a new owner, you're good to go. So act as if you owned it then. Make sure you have access to all the records that you're going to need from 2019. So if you bought it in Q4, you're going to need documents from Q1, 2, and 3. So make sure you've got access to everything there. Is this 25% number based on tax numbers or book numbers? Great question. I have a new company that files cash basis tax returns, and I'm converting to GAAP financials in 2020. Well, for sure, you want to be on the same basis quarter to quarter. So I won't go down the road of GAAP financials. That's kind of overkill unless you're a very large company. But we do accrual basis, but GAAP is way too extreme for us. Definitely, they need to be on the same basis. And I would just go with that because it is not clearly identified. But I definitely wouldn't do cash basis for 1 year, accrual basis for the next year, and compare those. You're going to, what I would say is I would convert your 2020 back to cash and make that comparison. And so then that question led to another question that somebody asked, saying, okay, well, I had a whole bunch of back billing, and then it's going to all dump into 1 quarter. How do I account for that? And to me, the answer is, how do you account for it? How do you account for it? Like, are you accrual basis or are you cash basis? And you need to follow that method. Like, I would be careful about trying to game the system and like, push things, like for instance, say that instance where they had a bunch of back billing and recovery work done, and they're really accrual basis, and they've always been accrual basis, and they're like, ooh, but if we convert to cash, we'll take advantage of this because we didn't get all those deposits. And like, I wouldn't do that. That's too much blatant walking the gray line. And I love the gray line, but that's too blatant for me. I would stick with how you normally. Now, if you're normally cash basis and that happened, then by all means, go with it. So that's my answer to that question, Linda. There is not a clear answer, but I would definitely make sure they're the same basis, whichever you decide to use. What if you didn't use all of it? What do you do? Can we use it now, or do we need to return it and then apply for round 2? Okay, so this makes me think that somebody has taken out a PPP loan. This is a good question. They didn't use it all in 2024, in the 24-week period. And so they didn't use everything they could for forgiveness. So it's still sitting there. And they're saying, should I return that and apply again for the remainder and then get to spend it this year? Gosh, that's a great question. I've not seen, I know there are going to be other people asking that question. I've not seen any guidance on that. Definitely stay tuned. And I would also check with your banker, because they're going to know. They may not know today. They're with everybody else waiting on SBA to give guidance. But I definitely think they would be your best source, because even if guidance came out that said one thing, they may require something else. And they may say, you know what, let's just not move the money, but let's do a second application and blah, blah. You never know what the bank is going to do. So I don't know the answer to that. And it's a really good question that I know there's going to be a lot of people asking that. So the only thing is, to apply for round 2, hold on, I'm going to go back a little bit. You have to have that 25% reduction. But that's for first time. This is where this gets really confusing. And I still myself don't feel 1000% solidified in it. The other stuff, I feel like, you know, it's Groundhog Day and never going away. Returning borrowers, and then this is first-time borrowers. So you're not a first-time borrower, you would be a returning borrower, which does have to have the 25% gross revenue decline. I'm not sure how that's going to play out. So if you would qualify for a second round, then definitely want to ask the bank, do I return it and apply again? But I think you're going to have to meet that qualification as well, not just, hey, I didn't spend all my money under the first loan and now they've expanded it, because they did not expand the 24 weeks to any longer. So if you didn't spend it in 24 weeks, then spending now doesn't qualify. Okay, we were going to, let me see what other questions we got. Oh, okay, this is a good question. Well, let me, okay. We've got several questions, so let me just go to the top. They all are PPP. And you guys, I can stay here as long as you guys want me to. We're almost at 11 o'clock. I've got a book till 12 and it won't shut off. And if you know me, you know, I'll just keep talking. So I'm happy to answer your questions as we go, because these are questions that several people need answers to, not just the asker. Can you please explain how to spend to cover shortfall for an FTE decrease issue on forgiveness? So there's this thing where you can spend your way into 100% forgiveness, even if you don't maintain the full FTE count. So if your FTE count drops from application date to forgiveness date, or the end of your spending period, not forgiveness application date, but when you completed your spending, if your FTE dropped, let's say it dropped 10%, then your forgiveness is cut 10%. We call that a haircut. You get a 10% haircut. Well, the way the form works, and I'm sorry I don't have it pulled up to show you, the way the form works, if you just follow the step-by-step instructions, it's one page of the form and it's very simple to follow. Just fill in the blank that it says. What's happening is, let's say you need, at week 12, you're almost fully spent, but you got another $10,000 to spend, but your payroll runs $100,000. Well, so then you go to week 14, and so 2 weeks later, payroll runs. Okay, now you've covered that 10,000 you needed. Oh, but you also have 90,000 that you spent additionally in your now covered period, because now your covered period is 14 weeks. You can include, the way the form works, you can include all of that payroll. So it says, how much did you spend on payroll? All right, cool, there's that number. What was your loan amount? All right, here's that number. And then it's like, after your, I'm probably going to say it wrong, but it picks the lower of your loan amount, how much you spent, and then how much after your haircut. But the way it works out, you can spend your way out of that haircut, because if you spent more than that 10% haircut on that payroll, then the way the form works, it is not the way it's written. It doesn't say, but if you spend more, you can get full forgiveness. It's simply the way the form works. And nobody has countered us with it yet. Like, we've used it and it works. So now let's say, same scenario. Let's say you're $10,000 short at week 12. Let's say you've got a $20,000 haircut. Those are a $30,000 haircut. You only need $10,000 more in your spending period, and your payroll is $20,000. So you go on out to week 14. So now I've got my full 10,000. I'm spent, but I still have a $30,000 haircut. Oh, and now my spending is only 10,000 more than what I needed, more than my loan amount. It'll make up 10,000 of that haircut, but you can't then say, oh, but I got a big FTE haircut, so I'm going to include another payroll. So that's getting too aggressive. And maybe you can and the bank won't notice. I don't think so. But it's got to be on that payroll that is the final bit of your spending and what's left, which, so do a little planning. Well, it's probably too late. You know, bonuses are, you know, relevant. Well, they were last year. So you kind of, that's how that works. And it, again, it's not by design in the act or the regulations itself. It's how the forms work. That would be an example of a loophole that they haven't figured out and closed up. So I hope that answered, and I'm sorry I don't have a form to show it to you, but it is, you pick the lower of three numbers, and one of them is, well, how much did you spend? And maybe it's how much did you spend after your haircut, and that's still more than your loan amount. Good to go. I think that's how it flows. And just a little insight here, we are working with 70 loans. If I had Courtney sitting with me, she could answer that off the top of her head, because she's the one looking at those forms day in and day out. I'm the one kind of trying to study and talk to everybody and do that. Is there any assistance for small businesses that opened in 2020 that don't have any employees in 2020? In 2019, yes, I've spent so much money on PPP for employees and would love to have some assistance getting refunded. Well, if it's on PPP and no employees, the PPP loan is not going to be what you're after, but these HHS provider relief funds are. And so unfortunately, you would have had to apply in the last tranche of money, which was November, December. You should have applied and gotten some money from this provider relief fund that would pay for the PPE that you're spending, which we'll get into next. But if you didn't already get the money, we don't know yet if there's going to be any more. If you can show a 25% reduction in revenue, do you still have to show employee retention? Yeah, you still have to maintain, or you still have to follow the same FTE rules as the original loan program. You've got to maintain your FTE count. But now, what's your starting FTE count? Because the way the Loan One program worked, it was FTE count at application date. So like if you're going to apply for round 2 and use FTE count now, you just need to maintain that FTE count, not since back in April when everybody had high FTEs. So something to think about there. But yeah, you do have to follow the same rules. I am in home care. 95% of my employees are part-timers. Am I going to be able to get much forgiveness at all? Yeah. It doesn't matter if your employees are part-time or full-time on forgiveness. There is the FTE count, which just, if you have 250 part-time people, it probably works out to 125 full-time employees. Depends on how many hours they work. You take your total payroll hours divided by total hours in that pay period. So if you're looking at one pay period, 80 hours, and you did 800 hours divided by 800 paid payroll hours by all your various part-timers divided by 80 hours a week, that's your FTE count. So that does not affect, as long as you held steady. Now, if you dropped FTEs a lot, which in your business means that your business dropped off a lot, you're going to have a haircut for, you didn't have the hours because your clients didn't want the services. And so you were not able to retain your FTEs, but that still will impact your overall forgiveness. But what you do is you stretch out your forgiveness period, because you were only given 2.5 months of payroll, which is 10 weeks. If you dropped 50%, then you should have 20 weeks to spend it. I mean, you could take the full 24 weeks, right? So even if it dropped off, you're going to be able to spend it all, but you're still going to have a haircut for the FTE count. And that's why somebody was asking, there is a way to spend your way out of that to an extent based on how your payrolls fall. And remember, okay, let's see what else we got. We have PPP loan, but less. We have our PPP loan forgiven but less the $10,000 grant, please, are we saying we should contact our banks to recalculate and forgive that too because they did not allow us to deduct it? Yes. So if you've already gotten forgiveness, because a lot of you said you got that letter or the bank told you, if it's already been forgiven and you had it reduced by an EIDL grant, you need to contact your bank. I don't know any other way to do it yet. Contact your bank and let them know, hey, I no longer have to exclude that from my forgiveness. What can we do to get this fixed? I don't want to pay it back. So yes, you do need to contact your banker. Do I have to apply for loan forgiveness for first PPP loan before I can apply for round 2? Again, that's really going to be in clarification. My guess is going to be no, because you've got 10 months from the end of your forgiveness period or your spending period to file for forgiveness, which is quite a ways out. But we'll probably get some clarification. My thought is, I'm sure what the banks are pushing for, if you haven't yet asked for forgiveness, let's do round 2, and then let's do forgiveness all at once. That's my guess, absolute guess. I guess that that's probably what bankers are pushing for because it's less work for them if they only have to process one forgiveness application, but I don't know that. If you've already gotten PPP loan for the first time, does that mean you cannot apply for round 2? That is not true. You can apply for round 2. You just have to have 300 or less employees, and you have to show that 25% decline in revenue for any one given quarter, 19 versus 20. Have you used the governor-directed shutdown as the reason for FTE shortfall? We lost a lot of revenue due to, yes. Yes, and I'm a little bit foggy. I'm just trying to be transparent. Yes, we have. We've used it extensively. And I've heard the super conservative CPA argument that your business was not directly shut down by the governor. You were a consequence of the governor shutting down, but he didn't shut you down because you're an essential business. And I've heard that that argument means that you are not qualified for that safe harbor. I disagree, and I will fight for you. I disagree. We filed every one of our applications, and where I'm fuzzy is that that is an exception to allow you to file the short form, the EZ, I almost called it 1040 EZ, the 3508 EZ. But it is also a safe harbor to keep you from getting that haircut. So you're correct. That's why, if that's why you reduce staff. So especially, so back to the guy, and I apologize, actually, I think it was anonymous, that had said 95% were part-timers and you got an FTE haircut. If your FTE haircut is because services were being declined, or like this, you did a lot of elective surgery, home care, and that all got shut down, I stand to argue that you qualify for that exclusion. And so I would go to bat for it. So yes, I have used that, and we are using it like across the board, and we've had lots forgiven, so it's getting passed. Can you get HHS if you purchased an agency? We've applied but got a message, ineligible tax ID number. Can you use old provider's info? Jay, I don't know the answer to that question. There's a lot of research. You need to go to the HHS Provider Relief Fund website and go through the FAQs, because there's a lot in there about ownership, change of ownership, and how that works. So you can find that on the HHS Provider Relief Fund site. And so I probably do need to try to get into those. Adrian, do we know when round 2 will be open? I think it's coming within the next week to 2 weeks. Again, we're waiting for the form, and then, you know, of course, the banks are going to have to be ready. We will be working with I think we're going to work with, so the AICPA stepped up, which is our big national association for CPAs, and they knew how much we were going through in trying to help clients. And long story short, the banks didn't want to pay us an agent fee for helping you apply for that. They normally would. Normally, if there's an SBA loan and I, as a CPA, bring you my client and I go to the banker is going to pay me because the bank gets paid by the SBA a fee, a 3% fee. Then the bank can pay almost not a finder's fee, but an agent fee to a CPA as an agent or anybody else, because I did not all the work. I helped you. I did a lot of work. So if I take a loan packet to a banker that I work with all the time, I know exactly what he wants it to look like. I can get it all dialed in and it makes the bank's work a lot easier. So they'll pay part of their fee to us. Well, that was kind of shut down through this PPP thing because the banks were not making any money on these loans. They got their fee, but there's no loan interest, and they're doing so much work. The amount of work that these banks are doing is incredible. And so if you've got a bank that's hammering it, they've really stepped up. That's awesome, but not all of them have. Anyways, AICPA stepped up. They partnered with a fintech company called Biz2Credit. That's going to be the lender. We will likely work with them, and the lender will pay us the agent's fee, meaning there won't be any cost to the borrower to get my help processing that application, but it will have to go through that lender. So I can't do it for another lender. It would be through that lender specifically. So I'm working on getting that set up. It's all online. It looks really slick. It's supposed to be easy to use. They beta tested it with 3,000 CPA firms using it. That's a huge beta test during the second half of the second tranche of PPP funds that they put out there. And then, and now it's going to go live for this round 2. So if anybody wants to know, we will be helping with that. We are hiring more help because we have a lot of interest in that, but we will be working specifically with one lender, I do believe. So are you sure only 10 months to file forgiveness? I asked this because my bank told me this had changed. I'm not going to say I'm 100% sure of anything. That may have changed. I will say banks have been wrong a lot. There have been, some banks were saying it was due December 31st. Some banks said you had 2 years, which was absolutely wrong. So I don't trust what the bank said because they've been wrong so much, but I'm not 100% sure that didn't change, but I did not read that changed anywhere. I almost need to, you know what, I get these Q&As in a PDF file when I'm done. I'll try to find that out. And what I'll do is, there was another question that I thought I said, oh, let me make some notes. Employee count. These are questions I can get answered. I just don't know them right now. FTE count for application. Is it straight count or FTE? I'll get that. And then I'll also, forgiveness app, due date. I'll find out if that got changed. And there was one more. SBA, normal SBA loan. Are those going to be forgiven? Any talk of that? Let me, because I've got a little pocket of CPA buddies, and I know I can get a lot of these answered. And so what I'll do is I'll put those answers in the email that goes out tomorrow. I hate leaving unanswered questions. If we left money in the bank account just to keep it open, would we need to give that money back? Yes, if you didn't spend it according to the, well, you don't have to give it back, but if you didn't, it doesn't matter what bank account it's in. If you leave it in that PPP loan account, but you file for forgiveness and everything's cool, you don't have to give it back. I myself did transition from Chase because they were difficult to work with over to a very small bank out of West Texas. They have one location in Austin, and they have been phenomenal. Vista Bank, love them. Are you sure only 10 months? I'm going to come back to that one. I'll get you an answer. And which website can I go to apply for the first time PPP loan? That you have to apply through a bank. All PPP loans go through a bank application process, not through SBA. So get with your bank on that. In regards to the 300 employee limit for PPP loan, will the SBA also use their small business standard based on annual revenues industry codes were more than 300 people. The way I read it, no. It's 300 employees. Again, I got to go back to the slides because that's what I'm saying. It's not ground into me yet. It's 300 employees if you're, let me just go back. Because there's returning borrowers and first-time borrowers. And so that's two different rules. Returning borrowers is 300 fewer, but I'm not sure, it wasn't clear if you qualify on the NIA, the other revenue standards, but it was clear in round 2, first-time borrowers, you must be 500 or fewer, even if you qualify under that other annual revenue test. So if you're a first-time borrower, if you've got more than 500, but you meet SBA rules under annual revenues, the way I read this, you do not qualify. I would get with your banker on that and see what their interpretation is. I'm betting they're not going to give you an answer today, but there were 3 potential loans. Not really. So they're saying PPP, HHS stimulus, and EIDL. Kind of, sort of. PPP was a forgivable loan. HHS stimulus, also known as Provider Relief Fund, which we need to get into, is not a loan. That's a grant. You don't have to file for forgiveness, but you have to prove that you spent it correctly. EIDL loan is a loan, but there's also an EIDL advance or an EIDL grant, which was just that 10,000 or less amount. But there is an actual EIDL loan, which is a full loan. That's an SBA loan that has repayment terms, yada, 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 which it was up to like $150,000, or maybe it was more than that, actually. That's wrong. I don't remember the terms, but it was at like 3.5% interest for for 20 years, and you don't start paying back for 2 years, something along that line. There's also, anybody that's looking, there is also this Main Street lending. I don't know the rules to it. It is part of the whole CARES Act, and it's part of the SBA program. Again, it's a loan. But if you're looking to establish credit, to establish borrowing power, and you want to borrow money that you will have to pay back, look at everything the SBA has right now, because there's quite a bit out there. And I know that Vista Bank that we worked with on several loans, they did a lot of this Main Street lending. And again, there's so much just with PPP and the Provider Relief Fund that I don't know all the programs. I do have something over in chat. Okay, under chat, and let's see, there might be a lot under chat. Oh, there is. Sorry, y'all. I don't see the questions under chat. Are COVID testing covered as deductions for our employees? They are deductions. That's going to be a business deduction, fully tax deduction. When I hear deduction, taxable. It is covered under Provider Relief Fund as an allowable expense there. I don't think it's an allowable expense for PPP forgiveness. But this bigger question, this is a great question and a great example. And this goes back to some earlier, the emergency paid sick leave, which I did, by the way, do a full session on that. If you're not a subscriber of my YouTube channel, if you go to YouTube, search Knight CPA Group, if you subscribe, you'll just get a notification when I post something. And a lot of times I'll post things, even if it's something I recorded specifically for my clients to get additional info out. They listen to videos quicker than they read emails. And some of this messaging can get kind of lengthy. So I do a lot of videos. But if you go subscribe, you'll get notified. And you can search that channel. There's a full session on emergency paid sick leave, and none of that has changed. It just got extended, and then in 2021, it's not mandatory. But to answer this question, here's the situation. She had 2 employees. One went tested positive for COVID, went home quarantined for 2 weeks. Another quarantine did self-quarantine for 2 weeks. I don't even know if they're related. Maybe she thought she was exposed elsewhere. Self-quarantine for 2 weeks on her own. The agency didn't send her home, but tested negative. And the question is, okay, I have to pay the one that tested positive, but I don't have to pay the one that tested negative. True, false, in between. You can pay both of them. They are both covered under the emergency paid sick leave. And I had to pay the one that tested positive. That depends on your agency size. If you have more than 50 employees, yes. If the employee is a healthcare provider, no. So there's a lot of factors that go into that, whether you are required to. Same for the one that that tested negative. A positive test result does not have any bearing on that emergency paid sick leave. No bearing at all. Doesn't matter if they test negative, positive. Doesn't even matter if they get tested. If they choose to quarantine because they feel like they were exposed, it's up to you whether you're going to pay them or not, unless you are by mandatory, which would have been last year, obligated to do it. So I would recommend checking out that webinar. All right, let's run into this HHS Provider Relief Fund, because I'm getting hungry, y'all. It's 11:20. Healthcare specific items. Again, the big act had a little bit in there about HHS and a little bit about healthcare specific items. I thought I'd try to pull out what I could. Good news, your 2% Medicare sequestration, I say it goofy, I know, is that relief where you were not having the 2% withheld has been extended to March 31st. So that's nice. Medicare physicians fee schedule is temporarily increased 3.75%. So if you're a physician or have any physician friends, you can tell them that. And then the big news is there's the new definition of lost revenue for provider relief. So we want to spend a minute on that. But another good question real quick. How many times can I pay them under that emergency paid sick leave? Very good question. A total of 10 days. That's it. Now, that's under the emergency paid, extended paid sick leave, emergency paid sick leave. The Extended Medical Family Leave Act, I say it all wrong, adds another, like 8 or 10 weeks. Again, that webinar goes into it in great detail. But that is if they have to, that's because they're staying home with children. It's at 2/3 of a pay rate. So that's a longer one. But for them, because they're quarantining for themselves, 2 weeks, 10 days. So let's say something happened and they're quarantined for 2 days and then they test negative and they're like, I want to come back to work. You can pay them 2 days. Now they got 8 days left to go. And so it can be separate events. It doesn't have to be all 10 days at once, but once they meet 10 days, it's done. And that does not start over moving into 2021. So even though they extended it to March 31st, it's still 10 days total for last year into this year. Okay. Okay. I am not going to read all of that. It's there for your reading pleasure. Basically, the long and short of this, because I can make it very short, when this first came out, Provider Relief Fund, when it very first came out, Secretary of HHS said, no strings attached, we're just giving you money. And that was complete BS, because then you got these terms and conditions you had to sign. And it was all this, I will do this, and it has to be used for this, and that. And that was very poorly. It was to prepare for, prevent, and respond to coronavirus. That was the extent of it, right? So then clarification comes out, additional guidance, and it says this money can be used to cover lost revenue due to the outbreak, the pandemic, or additional expenses. Well, then if you followed this, then they came around and they said, okay, well, what does lost revenue mean? At first they're saying, well, that means like the elective surgery agency, right? Your revenue went down because elective surgeries got shut off. So your referrals are down, your your business is down, period, right? But what happened was, you could count lost referrals, lost admissions, people declining service. You could count all this lost revenue. If you could quantify it, you could count it. And if you could justify it, right, you got to be able to put together a strong argument. So the argument was, okay, look, 2019 was great, but we were just getting started. We really hit our stride and we were scaling. And we were scaling like this: January, February, March, April, poof, and we dropped off. But 19 was down here. So we didn't drop all the way down to 19. So we're still doing better than we did in 19, but it clearly dropped off. And we were like, that's cool, because as long as we can show what your trajectory was, we could use budgeted numbers, we could justify that as lost revenue. And then a lot of people said, that's cool, because I had a lot of lost revenue, and that's going to be an easy way for me to use up this money, justify using it, meet my reporting requirements, and call it good without having to deal with digging out invoices for expenses. Well, then there was this turnabout, and HHS came out and said, well, that's not what we meant by lost revenue. We meant lost in net income. Like, your net income went down, and you got to measure quarter by quarter. Did your income go down? If it did, cool, we'll count that. But if not, and then it was even stricter than that. It was like, we're only going to count it up to this amount. And it got super restrictive. And what they were trying to do was push you to counting expenses. Like, go count all of your additional expenses that are COVID related, which was cool, right? Because you've got them. All of your PPE, all of the modifications you've had to make at the office, additional janitorial services, sanitation, you put in plexiglass, you expanded your office space, all these things you did, all the remote work you had to put in place, you bought laptops for people to go home with, whatever it is, right? All of that stuff. They said, we really want to cover that. And then if you had a loss in net income, we'll let you count that. And it really said, you have to count expenses first, lost revenue second. There was a lot of uproar. That came out, I want to say the end of September is when that notification came out. And we were all like, what just happened? Then they started backing off and they go, oh, well, we're sorry. We don't mean lost net income. We mean lost gross income. So like revenue less direct expenses. And they just kept waffling. So fast forward, they have reverted back to the original definition. And they are saying you can use budgeted amounts. You don't have to have been lost in comparison to 2019. But if you can just show a drop in revenue, that's what will qualify. I do think it still asks that you calculate expenses first, lost revenue second. But still, in my mind, kind of what we've done over the last 8-9 months is we've gotten real creative on what we feel like could qualify under this as an expense. And so maybe we don't have to be quite so creative, and maybe we can just use everything I listed. It's not even creative, it's super legit. And also like COVID pay. If you were paying hazard bonuses, COVID bonuses, whether it was a bonus for seeing a COVID patient, whether it was a bonus for seeing any patient, but you were given a bonus or an incremental $1 per visit additional pay just because you knew they were going out into hazards way, that is all COVID related. You've got to segregate it in your payroll system, but to me, that's still COVID related. Now, regular wages, whatever their regular pay was, I'm not going to the extreme that can be counted. Otherwise, you would use this up in 2 payrolls and then you're done. It's a moot point. But now you can't count it in both places. If you had COVID wages and you already filed for forgiveness and you counted it as part of your forgivable wages, then you can't count it also under your provider relief fund as allowable. So be careful there. You got to make, they're in one place or the other, but not both. But that's kind of where we're seeing it now. And so then somebody's asking, so on lost revenue, can you explain, does this mean first quarter 19 to first quarter 2020? For this purpose, this is actually, you have to report it quarter by quarter. So you need to have those numbers, but it's actually year over year. is how they were originally talking, but now it doesn't even matter. Now, if your revenue is down from 19 versus 20 on the books, then you can count that, right? For the whole year, you don't have to do any further work. Tax return. We were down $30,000. I'm justifying $30,000 of my provider relief fund to cover it. You're done. That's your reporting requirement right there. However, if you were one that was scaling and it dropped off, but it didn't dip past where you were in 19, then you're going to do a quarter by quarter comparison. But that doesn't even matter. You're actually want to build like, okay, we normally had, so I'll go back to the elective surgeries, so probably orthopedics and knee replacements, hip replacements. You're going to say, hey, we normally got 10 patients a month from Dr. Z who did knee replacements, and that dropped to 0. And those 10 patients were usually $3,300 episode payment. So that was $33,000 a month, whatever it is, 2 months, whatever. And you extrapolate that out, but you build some kind of worksheet that explains that and justifies it, then that is your work paper. And you want to use your billing system, your EMR, to show, look, here's a trend of Dr. Z's admits, or all of your doctor admits, right? It doesn't have to be one doctor. Or here are 3 patients that were on service that dropped. So think about your PAS providers. There is easy way to calculate a PAS provider. How many units are you usually providing? How many hours of service? You're usually 1,000 hours a week and you drop down to 700. Then that 300 times your reimbursement rate, that's your lost revenue. So that's how you calculate those things. Keep all of your work papers. Be as detailed as you can. So that should answer that. When will the website be open for reporting? Great question. The reporting is, and then I'll get back to slides because it might be in there. It's supposed to open January 15th and then be due February 15th. And I haven't heard anything more than that. So that still stands, although I wouldn't be totally surprised if it got pushed. Let me keep going through this. I'll come back. We've got a few more questions. I'll come back to them. If you have multiple provider numbers, this is relevant to you. I'm just going to put it out here. These targeted distributions, there was a lot of question about this agency got it, and then can it spend it on these other agencies? Depends on what kind of distribution it is. So you can read those rules. But whoever got the money has to do the reporting. So if the parent company got the money and then allocated it out to subs, that's cool. Subs need to report up to the parent. Parent does a reporting to HHS. Those are for the targeted distributions. I did not include the due date, so let me go through that a little bit more detailed. HHS Provider Relief Fund reporting. Anything, when I say spent, I mean you justified spending it, whether it was an expense that you paid for or lost revenue that you're claiming. That's how you justify using the money. Anything spent and justified in 2020 is due in that reporting period 1/1 to 2/15 of this year. You do not have to spend all of your money by 12/31. Good thing, because we're past it. If you did not spend all of your money, you're still going to report what you did spend in 2020 on this reporting. There will be another reporting session in July for everything from 1/1/2021 to June 30th, 2021 will then be due July 31st, 2021. Anything not spent by 6/30/2021 will be required to be returned to HHS. So it is a spend it or lose it, and that's just the rules, right? So you got your 2020 reporting due by 2/15, might get pushed back. Just stay tuned. And then anything spent in 2021 will be due by July 31st. I do not anticipate that getting pushed back, but who knows? Let me go back to more questions. Yes. So here, I'm going to read it. So justification for provider relief funds could potentially be as easy as I earned $1 million in 2019 and in 2020, I only earned 900,000 and my provider relief fund was 100K. Can it be that easy? Yes. And that to me is just tax return. Well, I say that according to the rules, yes. I have not seen the reporting. We don't know anything of what it looks like yet. I assume it's that easy unless they require you to report expenses because they know you have expenses. If they require you to report PPE, any office modifications, then if that's your situation, then what I would advise, I would say, okay, go find me a couple PPE invoices where you bulk, like maybe you bought a bunch of masks and a bunch of face shields or whatever. Let's claim those. And then the rest is tax return to tax return, right? So like show them some, but not spend a whole lot of time digging through every single expense. So that's my answer to that. How can we report lost revenue on our QuickBooks for the HHS funds? I would not recommend reporting it into QuickBooks. If you're looking at just revenue, like the last example, it's going to be reflected anyways, but this is not an entry. You're not going to record lost revenue into QuickBooks anywhere. Okay, things are jumping around, sorry. Okay. If a field staff tested positive, went to the hospital, passed away, how do you pay them? I don't know that question. And I have a very, very dear client that some of you may know that did pass away last week, very unexpectedly, not from COVID. So we're kind of dealing with some of that right now. Bless her heart, her sons work in the agency and their number one priority the next day was to get payroll submitted so that their 125 employees got paid. Where I was just on the phone with payroll company this morning about changing the bank account to make sure everything gets funded. We've always recommended go ahead and pay the employee as you would normally, and it will go into their estate, but that gets out of what I know how to guide on. So I don't know. If you know the family, I would definitely talk to them, and because there's this whole thing of how does their heirs get the money? I don't know that answer. My mom is on all of my accounts just in case that were to ever happen. I had myself covered. So to count COVID pay on reporting, do we only report up to 80 hours for each employee? Okay, so COVID pay is a very general term. If you're talking about emergency paid sick leave COVID pay, that's the 80 hours and you can only get up to 80 hours. That is where the tax credit is. That cannot go on PPP forgiveness and that cannot go in HHS Provider Relief Fund. COVID pay that can go in HH Provider Relief Fund would be additional pay. So you want yet another pay item that says hazard pay, COVID, bonus. You have to distinguish it in your payroll records and make sure whoever's doing your reporting understands how you set that up. My preference would be if it is emergency paid sick leave, it say that. I will say that most 9 out of 10 reports that I've seen so far are not set that way. The payroll system isn't set that way. It does say COVID pay. I don't like that because us getting this, I didn't get it, but you all getting the HHS Provider Relief Fund, we can have other COVID pay that is just additional pay that is different that we need to report differently. So I would rather the payroll system say EPSL pay, and then COVID pay would be things I'm going to count for HHS Provider Relief Fund. And honestly, one of the payroll providers we went with, we're able to change that term and then rerun their back reports, and the new name reflects on the old reports. And so we did that because I needed it clean and clear. It does get very confusing. Let's see, if we can track and document on a monthly basis PAS clients that decline services due to COVID, can we use that lost service hours to compute lost revenue, how do we offset it with payroll costs that we did not have to pay? Okay, that's a great question, Raul. First part is exactly right. Have a schedule that says decline service. I think there's a term for it. Decline services. And that's one piece, that's all you need, right? Compute it, however many hours they normally get, reimbursement rate, total it up, you're good to go. You do not have to offset it with the fact that you did not have to pay the payroll that goes with that. So don't worry about that. You're looking at gross revenue. And that is where that history comes in. And that's why, Christy, I see your comment over there that I was getting confusing. Those that have been following this all along need to hear the history. You do not have to net that payroll anymore. So to answer Christy's question, where we are now is what Raul just explained. Calculate your lost revenue regardless of expenses, regardless that you had to pay payroll or didn't have to pay payroll. You can calculate your lost revenue like the original formula had it, which if you go back, I have a good presentation in late July when that's how it was on the HHS Provider Relief Fund, and probably one even maybe a little bit earlier where I did it with AlayaCare. We went into a lot of detail of how to calculate lost revenue. If you go back to that webinar, it has really good info because she gets into AlayaCare is a EMR system, and she did a great job because she wasn't trying to sell you AlayaCare. She was just showing how an EMR should be able to give you data and how you can maybe tag your clients or your patients that they're declined services right now. And it can kind of help you calculate that. So that's kind of why I went into that history, not to confuse anybody. I do have a tendency to talk too fast. So I do apologize for that. I just get so excited. Okay, so that's that. I got just a couple more questions. Amy, you're really good at this. Thank you for everything. You're welcome. Thank you, Francis. PPP loan proceeds and expensed in 2020 are going to be fully deductible in 2020. Yes. In 2021, the loan is forgiven and the forgiven amount is to be recognized as income. No. So Victor, you do not have to recognize anything as income 2020 or 2021. Deduct your expenses this is PPP. When they were spent in 2020, you deduct your expenses. You leave it in payroll expense, just how it was paid. Expense it like normal. When you get forgiveness, you do not have to report it as income. Now, somebody asked a question that wasn't exactly the same, but it made me think of something. When that's forgiven, you're going to have a loan payable on your balance sheet. Well, now you don't have that loan payable anymore. So you're going to zero that out. And because we use a two-sided entry accounting system, it has to go somewhere. Put it in other income, the very bottom in QuickBooks. Make it set up other income, PPP forgiveness on the account type. Make it an other income as the type, and it'll show up at the very bottom. So you still have net income. I think they call it net ordinary income before that PPP income. So on your financials, it's going to show as income because it's got to go somewhere, but it's not going to be taxable. And you want it very clearly spelled out so that your tax preparer knows to not include it. If your tax preparer includes that in your taxable income, they are wrong and they need to get themselves educated on this. Hi, Christine. I see you. You'll get that recording. No worries. I feel like that made me think of something else too. Oh, HHS provider relief funds are taxable. That money that you get in, that is fully taxable income. For our financials, we are also putting it at the bottom as other income because we want to see it outside of how the agency did for the year, but it will be taxable income. And it's up to you. You can put it with other income, with your normal income if you want, but we chose to put it at the bottom. Okay, let's see. How many times can you pay them? I answered that. Are there additional slides? I'm only seeing HHS Provider Relief Fund overview. Oh, okay. I think I already went through that. HHS Provider Relief Fund, who qualifies, who can apply? This is kind of past tense right now. Nobody can apply right now. This was money that Medicare, HHS started just throwing out. April 10th was the first round of distributions. There have been many since, and talk about getting confusing. That gets super confusing. They did a third round in November that you had to apply for, that most everybody qualified for. But if you haven't gotten any by now, unfortunately, there's not anything open right now, but you want to stay in touch. If you're on my email list, you'll get notifications. If you're on TAC was blowing it up with, there's another round of funding being done, who's eligible. So if you haven't already got it, there is no place to go apply for it. Now, if you applied in that third round and haven't yet got funded, there may still be hope, but you would have known, you would have had to apply for it. How long do you have to spend this HHS stimulus? Again, you have until June 30th to spend it all. Anything not spent by June 30th, 2021 will have to be given back. Okay, Medicare. Well, Medicaid also was, so Medicare was eligible, Medicaid was eligible. They then opened it up to more provider types, such as chiropractors, dentists, and I don't know if they ever opened it to straight private pay providers. I don't think they did, but they did open it. So round 1 was Medicare. Round 2 opened it up to Medicaid. Round 3 was everybody plus some additional, like behavioral health wasn't originally one of the provider types. They got into the pool. And in round 3, they said, if you've already received money, but you haven't received 2% of net revenue or your total revenue, then we want to get you up to 2% of total revenue. And if you've suffered great losses or you've had extreme expenses, we want to see that and we might be able to pay you more. That's kind of how phase 3 worked out. I think, and it wasn't clear, but it sounded like what they were going to do is take everybody that applied. If you hadn't been paid 2% of revenue, they were going to pay you up to 2% of revenue to everybody. So now everybody that wanted it was paid 2% of revenue. Then anything left in the pool, they started divvying it equitably to those that could prove lots of damage, a lot of extra expense or what have you. Where should we go to print out the slides? They will be, Christine, they'll be emailed to you. And then they also go up on our website. Usually the website and the slides and the recording are usually on the website by the end of the day. And then the automated email will go out tomorrow. So that's what I've got here. I mean, besides a rumbling tummy that is just hungry. So I hope the team has placed the lunch order because I'm hungry. We're getting Panera. Okay, a couple more questions. One more. Are you still going to do a webinar? Yes. Great. I'm glad you brought this up. I plan to do a full detail, like I don't even want to call it a webinar. I want to do a class on how to do the HHS Provider Relief Fund reporting because I simply don't have the capacity to help everybody. So, and I think it's going to end up being fairly simple. I think somebody needs to know how to run Excel and then just gather all your stuff together. So that is my intention. When we get guidance and instruction on that, you're absolutely right. I will get that to you. And it's not going to be a, hey, here's how complicated it is. Call us to do it for you. I promise. It's going to be a, hey, here's how you do it yourself. Here's where you find answers. Here's what it looks like. I mean, yes, I plan on doing it as long as it's that simple. I hope it's that simple. So, so that answers that question. And then how long did we have to apply for HHS grant? Is there any way we can still apply? Yes, you did have to, in the original tranche, you didn't have to apply for this tranche 3 or round 3 of the HHS Provider Relief Fund. You did have to apply for it and it is closed at this time. it is very reasonable. They may do another round of that. There's no talks of it that I'm aware of, but I don't know why. I mean, you know, because money grows on trees right now. So they just keep doing it. Will there be a joint section with HCCL? If they want to. Yeah, I haven't talked to them in a while. I think we both, that's healthcare consulting. I think we've both been so busy that we just haven't circled back around, but that was a lot of fun. I got to tell you, I learned a lot sitting in on those webinars on all the clinical. I thought there was so much financial compliance. You guys, I've been humbled and I hush after I see what you all have to deal with. And I had to go to the clinic and get tested myself. And a girl showed up to be fitted for her N95 mask. Like, I didn't even know that was a thing. I mean, you know, you don't know what you don't know. So anyways, will I do something with healthcare consulting? Absolutely. If they want to, we will. So I'll reach out to them. I also have a call scheduled with Wanda's consulting, if anybody works with them, to do some joint education with that group, which I've not done before, and I'm looking forward to it. So watch for that. I also, for those of you that want to hang around and hear me talk a bit more, I do know that I'm going to try to plan out a series, maybe it's 3 or 4, and actually bring in my business coach. So we use a system called EOS, Entrepreneurial Operating System. There's a book called Traction, and there's Traction, the book, but then there's Traction, Get a Grip on Your Business, which takes the concepts and puts it into a fable, which is how I learn best. That has been game changing for us. And it's really about how to run a business with putting in place like a leadership team and management, and how you run meetings and do things where you've got a system, a framework to get, like I like to say, to get shit done. We've been doing it for a year now, and then COVID hit. And I actually brought in a new coach. He's actually former CPA firm owner. He's a CPA firm. He's in South Carolina. And so I want to bring some of those tools to you guys. And I have to be careful. We can't brand it as EOS. I don't think. I'm not certified there. But that's what I'd like to, I want these webinars to be about this stuff that's super important to you. But I also want to help you guys learn how to run a better business. We all need help, right? And so anything that helps me, I just want to share it with everybody else. So I already talked to Joe, is my coach's name, and want to invite him in. He talks a lot slower, and invite him in to really help with that. So stay on our mail list. I try not to send out a bunch of spam and crap. And so watch for that to be coming. I don't know what to call it yet, but I think we'll start it in February is my thing. And I'm thinking if I can get them for 2 or 3 or 4 sessions and just kind of see how it goes. And maybe we don't need that much time. And then he's an excellent business coach. If anybody, wants to hire one, we're doing it completely virtual and it's been great. So anyways, thank you guys all for listening to me ramble on as I tend to do and just showing up. And again, we're here if you need help. We're going through a lot of PPP forgiveness stuff. We'll be there for PPP round 2. And when it's time to do provider relief fund reporting, we'll be there for that. And we're booming with new client work. We've got new employees. I got new employees starting Monday. So it's an exciting time over here at the firm. But everybody have a great day and let me know what I can do for you. Thanks, everybody.